Have you ever looked at your paycheck and thought, I'm making more money than I did a few years ago, so why does it still feel like I'm struggling? If that sounds familiar, you're not alone. Millions of Americans are experiencing the same thing. The reason isn't always bad spending habits or a lack of income. In many cases, it's inflation quietly working against you. Inflation is one of the biggest wealth killers in the world because it slowly reduces the value of your money without most people even noticing. In today's video, we're going to uncover how inflation is secretly making you poorer and, more importantly, the practical strategies you can use to protect your wealth and stay ahead financially. Let's start with the basics. Inflation is the rate at which the prices of goods and services increase over time. When inflation rises, every dollar you own buys a little less than it did before. Think about groceries, gas, rent, healthcare, and even your favorite coffee. Chances are they all cost significantly more today than they did just a few years ago. The problem is that while prices often rise quickly, wages don't always keep pace. As a result, your purchasing power declines, meaning your money simply doesn't stretch as far as it used to. Here's a simple example. Imagine you have $10,000 sitting in a savings account earning 1% interest per year. If inflation is running at 4%, you're actually losing purchasing power every year. On paper, your balance may be growing slightly, but in reality, your money is buying less and less. This is why many financial experts refer to inflation as a hidden tax. It doesn't show up as a bill in your mailbox, but it slowly takes away your ability to buy goods and services over time. One reason inflation is so dangerous is because it happens gradually. Unlike a stock market crash, which grabs headlines and causes panic overnight, inflation works quietly in the background. Year after year, prices creep higher. A meal that once cost $10 may now cost $15. A home that sold for $200,000 years ago may now cost double or even triple that amount. Because the changes are slow, many people fail to realize how much purchasing power they've lost. The people who suffer the most from inflation are often those who keep the majority of their wealth in cash. While having an emergency fund is important, leaving large amounts of money sitting idle for years can be costly. Cash may feel safe, but when inflation rises faster than your savings account earns interest, your money is effectively shrinking. This is why simply saving money is no longer enough. To build wealth in today's economy, you need your money to grow faster than inflation. So how do the wealthy protect themselves? The answer is simple. They own assets. Assets such as stocks, real estate, and businesses have historically increased in value over time. When inflation rises, many companies raise their prices, which can increase profits and boost stock values. Real estate owners often benefit because property values and rental income tend to rise as prices increase across the economy. Instead of watching their purchasing power disappear, asset owners position themselves to grow their wealth. One of the easiest ways for beginners to fight inflation is through investing in broad market index funds. These funds allow you to own small pieces of hundreds or even thousands of companies with a single investment, rather than trying to pick the next big stock. Index funds provide exposure to the overall growth of the economy. Historically, the stock market has delivered returns that outpace inflation over the long term, making it one of the most effective tools for preserving and growing wealth. If you enjoyed this video and found it valuable, make sure to like, subscribe, and turn on notifications for more investing and personal finance insights.